Yo, what is going on, guys? Today I'm going to be going through some of my trades that I've been taking over the last 2 weeks. In the last 2 weeks, actually, I haven't had a single day um, where I've been negative. Every single day has been profitable in the last 2 weeks, and I've made over 20 R from what I've risked over the last 2 weeks. I'll just take you guys through some of the trades that I took. Every single trade, whenever I do day trading, is always on S&P. And I'll take you through kind of what I was thinking. I'll first play it in real time, and then I'll give my analysis so you kind of get some backstory on why I was taking these trades. As you can see here, this is from 325. Trading the S&P, and I'll probably just kind of skip through here and there, just so you guys don't have to sit through the whole trade. But this was one of the trades I took, and I'll break down, why I was taking these trades after you watch it play out here. I'll just fast forward a bit. This trade here was a 3.5 R trade, and something that I like to do when there's very explosive moves like this is I'll actually trail my stop at 3R, because sometimes what will happen when you have explosive moves like this is it'll come up, front run your TP barely, and then come back, maybe stop you out at break even. And I was willing to take at least 3 risk to reward here. It actually came and hit my TP at 3.5 here. But I'll take you through what exactly I was seeing. This is the trade right here. This is what I was seeing beforehand. I'll start by showing you some of the order flow here, which is what I was looking at, which is, okay, we had very aggressive selling at coming down on your low, and we couldn't go lower. And huge aggressive delta here, and we couldn't go lower. But then we came up, we had aggressive buying that wasn't rewarded, so what happened? We made a new low. And then during this time when we made a new low, we actually saw that, and you'll see it here in a second, that we're making bullish divergence, which is one of my confluences that I use for taking trades. I always, when I take a trade using this strategy, I wait for a new local low, which in this case we've done right here. And then you need to gain an important level, which is either a level that made a new high, a level that made a low. And in this case, this is the level that we lost and retested that created this low. So until we gain this level, I was looking for continuation down. But if we gain this level and hold it, I was looking for it to come retest up here. And the reason, I'll invert the chart so you can see why I was looking for it to come retest this level, because if we're using this as the low in our sequence, as that being the low, this is the local level that we retested to make this low. Okay, and what we saw was we had such an explosive move up here on this candle that this was never tested. This is an untested level, and if you don't know what an untested level is, you can just kind of think of it as a magnet for price. Okay, so this was roughly where I was targeting. You can see here, we now gained, okay? Now, we gained and we held this level, which was the level that took us down. So now, this is where it starts looking bullish, okay? And I got in. I think I got in on this retest or this retest, but generally I like to wait, maybe at least one or two candles holding the level. Otherwise, sometimes it'll just come down and chop you out, right? You need to actually wait to see that it's holding the level and respecting it. Um, so the trade was hold this, test this, okay? And what we'll see is we had a pretty explosive move up. Okay, I didn't have a runner on this one. I think my risk to reward on this was only 3.5, which is still pretty good. But what you'll see too on the order flow, wrong tab, sorry. We had really aggressive buying here, right? Now we've gained and held this level. So where do you think we're going? We're going to continue upwards because buyers are getting rewarded. Okay, so order flow is saying up, divergence is saying up, and the actual price action is saying up. And our target is here, targeting a untested level, and also we have an area of balance here, which is also an attractor for price. Okay? So those were some of the confluences that I took on that trade. Now let me pull up another trade here. Let's pull up this one here. 323. Okay. So if you're just looking at the candlestick chart here, the way I execute this trade might not make any sense to you. Like, okay, we just came and we made a high higher than this high, and we rejected from it. Okay. And I'll fast forward here, and you'll see this was actually an over 4 risk to reward trade. Looks like it happens pretty fast here, so I'll just wait. This one was very aggressive. And what you'll see from this trade when we pull up the order flow, I'll pull up here. This strategy I call footprint scalp. This is not my other strategy where I wait for a new high or a new low, but actually I wait for it to come into an area of supply and demand, and I look at the footprint chart to see how it reacts. And what happened is when we came in this value area is that there was heavily aggressive buying, heavy aggressive delta at the top of these wicks, but they were not getting rewarded. We were closing down here. We were closing down there. And what this means is that there's a passive seller sitting up here absorbing all of this buying power, okay? And you also had the value area low here, which I was looking to be broken again for continuation down. So if you guys don't know anything about auction market theory, I'll just give a brief overview here. So this is deep charts. These are value volume profiles. And what you'll see is here you have the most volume traded on this whole volume profile. All right. This is not the example that I was showing you, but this is just what I had up. So I'm going to use this as an example. But basically what I was looking for is how we reacted into this level, because this is the level where the most big buyers and big sellers are transacting at. And how do we know that? Because the most volume was sold here. And so a way I can describe it is like if you're a big seller or buyer who's trying to put millions of dollars on the books, right? You need to do it in a spot where you think there's going to be, a level of chop at. And the reason that is so that they're getting filled, like this, instead of if they're in, like a area where there's not value. Like down here, it's a low volume node. So what do you see? We just go straight through it. Okay. And you'll see when we go through value area lows or value area highs, the price gets very volatile very fast. Okay. As you can see, this was the previous profile from the previous day. And on this day, it came and it broke the value area low right here. And what happens when it breaks the value area low? It goes straight down very quickly. And you can see at the beneath the value area low, there's very little volume. Okay. So there's not much reason for a big market participant or market maker to transact in these areas because it's an area where you would expect the market to flush through. Just like when you come into the value area right here, where you have your POC, which is your point of control, where you have the most of your volume transacted. Okay? So what I do is I look at, and I'll bring this back up on the chart here. I look at how we're reacting in this level for the point of control. And if you're using point of control, one thing I'll say is depending on what software you're using or broker, or maybe you're using it in TradingView, you need to keep into account that, okay, this is the point of control as a line, but this line isn't going to be the same for everybody. Okay? And the reason that is because their software is a little bit different, everything's a little bit different. So what you should really have here for your POC is a zone, which is what I had on my picture. And I'm seeing how we're reacting at this zone to take a trade. Okay? We came up here, tons of aggressive buying, not being rewarded, and then we have aggressive delta following the aggressive buying, okay? And then we have our value area low here. So I was expecting the price to, the value area low was somewhere in here, and I was seeing this happen, and I was saying, okay, we're getting rejected from this value area, the POC. Now I'm expecting us to break the value area low and price to accelerate, because that's what happens when you enter areas of small volume. Now another thing I'll show you if you don't know anything about bell distributions, but in this range here you have 95% of the data is traded within this range. So if I pull up deep charts again, this value area is where you would expect 95% of the data to be traded. So when we're breaking the value area low, what you can expect is that after we've had some kind of good drop down, that if we regain this value area low, we're going to retest the POC or even the value area high. So you can use this, and you'll see right here that we lost this, we came back up, and we tested it perfectly at the value area high and just immediately dumped from it, okay? So these are big levels, and you can use them to trade from one to another. I typically don't use it to trade from one to the next. I'll usually take my profits at important levels that I use in my other strategy. But you can do this, and there's plenty of people who are successful doing that. Okay? So that is the trade. Some of the trades I took, I probably took over the last 2 weeks, maybe 20 to 25 trades, somewhere in there. I could make more videos on this if you guys would like to see that in the future. This one's kind of a longer one, and I could get a lot more in depth on actual price action if you guys would like to see that. But for now, I hope you guys have a great rest of your Saturday, and I hope you enjoyed the video. And just let me know if you want to see more day trading videos. And I'll see you guys. Peace.